Hello and welcome to another update video about MATIC. On the MATIC chart, we've seen this head and shoulders pattern play out, talked about it in yesterday's video. We had our neckline defined for the head and shoulders pattern here at 77 cents, 77.5 cents, and dropped below it. Maybe we are now seeing a retest from that neckline from below. The support region that's relevant for this wave 4 is between 64 cents and 76 cents. How do we measure that? Well, we take the length of the third wave all the way up there to 98 cents. Yeah, from down here to up there. This is the point that triggered the 98 cents, or the basically just a measurement point there, and it gives you this support area there. And first line of support is 76 cents. We're below that. The probably more likely one in a diagonal, because this move up is at best a diagonal, maybe even something more bearish, but at best. Next level is 70 cents, the 50% retracement. Below that we've got the 64.8 cent level, which is the 61.8 retracement. So it's coming along at the moment, all coming together. Quite a sharp decline though, and not really any substantial recovery yet, but it also rallied quite substantially from our support area here back in October. So what I'm watching for is now this potential three-wave pullback to be completed soon, somewhere in this box ideally. If we get a break below support, that would not be invalidation for the yellow wave count. I will probably add the 78.6 retracement level if we break below 65 cents. The reason is we're dealing with a diagonal. This is not like an impulse where we can say, okay, you know, an impulse shouldn't break below the 50% fib level, because then we will basically call a wave 4 invalidated. In a diagonal, it's not exactly like that. In a diagonal, we know that sometimes a wave 4 can be deep. You sometimes even get overlaps between wave 4 and 1. So, you know, we shouldn't say that just because it breaks below 64 cents, the yellow count has to be basically taken out. You know, it will certainly challenge the reliability of the yellow count, absolutely. But then diagonals aren't terribly reliable anyway. And I think so far we've captured here the waves quite nicely. In this third wave, for example, we identified here this ABC structure, and I gave you my view at the end of the wave 4 that we should get another high in wave 5, which happened, and that we would start the wave 4 pullback with a break below the trend line, which all happened. And now it's coming together. Typically what we find in crypto is that a wave 2 and a wave 4 have a similar length, or even the same length. So if we take the length of that wave 2 there, just to show you with a box the comparison, then basically we're nearly there, right? If you go, I mean, it's not a rule, right? It's just something that I spot and see quite frequently there. So just see, you know, if you just see the box, you see it, you know, from the proportional point of view, it looks quite nice already. If we get a little bit longer, that correction, maybe until, I don't know, tomorrow, Friday, then we basically have the same length. So it, you know, requirements fulfilled from a duration point of view, but also from a, let's say, pullback price point of view, because we're now already in the ideal support area for a wave 4. Could still go a little lower in this C wave though. So what I shared with you yesterday as well, if I go to the 1 hour chart, is my idea that, you know, it could go a little lower because we have, obviously, if we just take the measurement of this head and shoulders pattern, the target, it actually, if I have to go to the proper breakout point, then it would actually take us down to around about 61 cents. So that just prepares, it's not a very reliable target or measurement method, but it prepares us for the risk that, or the potential that this C wave could be quite low. It doesn't need to be, it's just, you know, it's just a bit of a warning there. I don't normally use these head and shoulders targets, but for Solana it worked, the inverse head and shoulders before the breakout. So it's just one target to watch there. The 61 cent level, 62 cent level. If we take the Fibonacci extensions, so if we take the extensions of wave A, yeah, and then we can add them to B, then we see that the 68.8 cent level, 69 cent level basically gives us a key level to watch. the 100% extension level. Below that, we've got 65. That's pretty much good overlap with the 50% retracement level at 70 cents and the 61.8 retracement at 65. So there's a good overlap there. Below that, yeah, the 60 cent level is the 1.618 extension level. I would not rule that out. Okay, so it might be worth, maybe I will leave them here on the chart just as another key area to watch. But below the 1.618, yeah, things are starting to look a little bit more bearish, but we would then have to look at the structure. So ideally, I don't want it to go, I mean, below 64, 65 cents, I will start to feel uncomfortable about the bullish count. Then it's obviously the white one, which will likely work out with another dip into the larger support area between 41 and 50 cents. But yeah, we'll see where we go. For now, it's looking okay, going according to plan at the moment, built a nice head and shoulders there. And let's see if we can spend some time in this support area before we get that wave 5 recovery. Thanks a lot for watching. Goodbye.